All right, welcome back. So again, we did a few things that in order to open our store, right? We got our petty cash ready, we have our cash register ready, and we set up our menu, and now we officially are open. Now, let's go ahead and take a look at our first sale. So our first customer, so Mr. Albert Allen, right? He's responsible for being a sales representative and making contact with customers to be a part sale representative for our wholesale unit. So let's go ahead and see the invoice that he has created. What has he done? So he created an invoice.
Yeah, it looks like you got an order from Katie's Coffee Corner.
Okay, good. And what are the details here?
It's 25 pounds of coffee combined, 15 regular, 10 supreme, and 20 coffee mugs.
Good. What other things that are written on this invoice down below? Right, we have a 50% COD, so we require them to at least commit to us. If you can deposit a 50% down, then the rest of the bill, I'll bill you the rest. Okay, so that's the 50% COD net 5. Okay, when am I going to deliver this to Katie?
June 19.
June 19. What's today?
Today's June
17.
17. Okay, good. So this order, what does it, let me see, how do I record this order? Do I journalize it? Did I actually completed the sale? What happened here? Did I receive money?
No.
So what is this?
Purchase order.
Oh, okay, so there's another terminology. It's not purchase order, it's a sales order. But yes, correct. The same essential idea. This person is just submitting an order in. Nothing is actually done. The coffee, right? We give them a quote. We said that, okay, well, if you're going to order this coffee because you are ordering it as a wholesaler, I'm going to tax exempt you. However, I'm going to charge a delivery fee of $30 because I have to deliver the items to you. All right? And the one thing that you need to know is that this is not an advance payment. They didn't pay me yet. They didn't even get billed yet. And I haven't delivered or complete my service yet. So in this case, a transaction has not occurred. However, we should at least write down the information down somewhere, right? Because it is considered a sales order. So let's go ahead and go to our subsidiary ledger. Okay. And let's go under commissions real quick. So at least we have an idea. All right. The date, we're not going to place it in there because right now we haven't delivered it to them yet. We haven't acquired or completed our sales yet. So then in this case, I'm just writing the information down. So then when I do deliver to Katie, right, at least I have the information readily available in case she chooses to cancel the order at any given time. So again, this is Katie's, I think it's Katie's Coffee Corner. Actually, no, Katie's Coffee. Oh, it is corner. Okay, so Katie's Coffee's corner. Perfect. All right. At least I know I'm going to be submitting something to them. Invoice, we haven't invoiced them yet, but we should write a sales amount because we're pending on the sale. So in this case, my sale order is going to be for the, what's the grand total on the sales order? $219.05, right? Because not only did we include, we charge for, or we're going to charge for the $189.05, we also have to tack in that $30 delivery fee. So in this case, the total amount is going to be for the $219.05. So here we have the 219.05, right? Again, we haven't delivered it to them, we haven't billed them yet, and we haven't received the money yet, or in this case, completed the sales. So we're not gonna calculate the 10%. We're not gonna calculate any of those. We're just gonna keep it in this form. All right. So now let's go ahead and see what happened next. Okay. So I'm gonna kind of we have a grand opening. That means for our grand opening, we sold all these coffee, and we also sold we sold all these coffee cups. All right. We also have a sales discount because it's our grand opening, right? That's how you entice your customers to come in and try your coffee. You say, today's my grand opening. I'm going to say the whole store is 20% off. So let's go ahead and take a look. How many cups of regular coffee did I sell? And how many cups of Supreme coffee did I sell?
Regular coffee, you sold total of 149, medium and large total.
Good. Like, okay, so, and then of course, I have my subtotal of my total sales, okay? And I have my 20% discount, and I have tax. So, looking at this, I should have received a grand total of $745.94 because if I look at the bottom, it says cash sales. Okay? Okay, so all of these were cash sales. So, first things first is, how am I going to break this down and journalize it? Where should I start first? If I have the indicator that all of these are cash sales, all right, where should I start first?
Should it be inventory?
Okay, we will dive right into inventory, but right now we're currently focusing
Sales.
on just the sales. Debit sales? Try again.
Would be accounts receivable?
Do we have a particular customer?
Well, we don't have a cash account.
Right? And what's
Our
the
chart of accounts, what, bank or checking?
it would be checking, because what is that key thing that you see at the bottom of the page? It says that we're gonna deposit all cash sales, okay, to the bank.
Debiting, checking.
So we'll be debiting checking. Good. All right, which we know to be 10,100. Okay. What else do we need to include?
Discount.
Yes, the sales discount. Now, let's go ahead and check our chart of accounts. Do we actually have a sales discount account? So let's go to revenues and check it out. Let's see. Oh, no, there you go, revenues.
6,000, yes. 46,000.
Yes, 26,000 is our sales discount account. 46,000. That's what it meant. 46,000. All right, so yes, we need to recognize our sales discount. Okay. We also have to include sales tax, but where are we going to put the sales tax? Let's check your chart of accounts. Do you see sales tax anywhere? Or in this case, what does sales tax, what is it considered?
Liability?
It's a liability. Why? Is it truly your money?
No, it's
No.
the government.
It's
So it's just sales tax payable.
yes. Are we going to debit it or are we going to credit it? If we owe the government money and it's a liability, we're going to credit that account, okay? I'm going to save that to the very end. Okay? Now, what's the meat of this journal that we're missing?
Okay.
We're missing the sales, okay? Now, let's take a look at the sales section underneath my chart of accounts, okay? Is it broken down to specifics or am I just putting it all into sales? It is very specific. Okay, so what do we have here? We have sales medium regular coffee. We have sales large regular coffee. We have sales medium supreme coffee. And we also have sales large supreme coffee. So yes, this is very tedious. However, this is how you do accounting, because the more specific you are, right? And we'll talk about this in QuickBooks as well. The more specific you are, the more you can keep track of specific items that you sell, right? In this case, I sell a specific item. I sell medium-sized regular coffee, and I also sell large-sized regular coffee, right? So in this case, right, I have two different selling prices. So if I have two different selling prices, I kind of want to separate that. I want to make sure that I could see which one sells better. All right, are my larger cups more successful, or is my supreme coffee doing a lot better? So that's going to be pertinent information for you to keep track of when you do, if you are the sales representative, you can run your report saying, oh, okay, it seems like we should buy more supreme coffee because it's more, people like it a lot more than the regular coffee. So things like that can, something as minuscule as that can create much more better management, right? We can structure our company a little better. Maybe instead of buying too much of the regular coffee, we should actually start investing in a supreme coffee. Maybe even throw in a third different coffee, right? So here, it's very important that you keep your sales separate. And again, at the end of the day, they're all going into the same main account, which is the actual sales account. But because it's specific, let's go ahead and take a look at these specific accounts and let's measure them, okay? Or let's journalize them, okay? So first things first is going to be, I'm going to credit them because they're sales. Right? We always credit our sales. Never ever do we ever debit our sales unless it's a contra account. All right? So in this case, sales. And we're going to start with the medium regular coffee. All right? Account number
40,300.
40,300. All right? Now, I'm just going to go ahead and list out all of my accounts first, and then we'll go through the account balance, the amounts afterwards. All right, I want you to see the structure of this journal, okay? Because it will become something that you may have to use over and over and over again. All right, large regular coffee,
4350.
4350. Okay, we also have sales medium supreme coffee, 40450. Okay, and we also have sales large supreme coffee.
40,500.
40,500. Good. And then now we can go ahead and introduce our sales tax real quick. Okay, so sales tax payable. All right, which is what account number is sales tax payable?
$27,000.
27,000. Okay, so let's go ahead and enter the information into the journal, right? Like I've mentioned before, I've already calculated this for you because your job is not to calculate your total sales. I'm gonna give you the receipt of the total sales, and you're just gonna update you're just gonna update the journal and update the inventory. So in this case, first things first, how much cash did I receive?
745.94.
Okay. How much was my sales discount for?
173.27.
Good. And then my credit. So how much did I sell the regular medium coffee for?
157.21.
157.21. And then my sales for large regular coffee? 209.30. All right. Medium supreme coffee? 201.69. And then supreme coffee or large supreme coffee
293.16.
293.16. Okay, so again, rule of thumb, because we're using so many numbers now, let's go ahead and equal sum each column to ensure that my debits match my credits. Okay, so I'm going to go ahead and do it right here in the journal itself because I have the columns here. Okay, and okay, so I am off. Oh, I forgot the tax. How much was the tax? 56.85. Now I balance on both sides with 918.21 on both sides. So now I can just eliminate that from my journal. Okay, you can do it on the side of here if you'd like. It's, you know, I'm not going to say you can't do it there. Usually what you do here is for any minor calculations, utilize the space and the work here. So if you want to equal sum all of them, I think it's just easier that you just do it in the journal and just erase it. Okay, so here we verified that my debits and my credits match. All right, so for my description here, I'm going to go ahead and write grand opening, right? 20% discount, okay, on cash sales. Okay. All right. So that is what we do every time we have a sale. And because we're going to be doing this for the next 2 weeks from now, right? Because we're going to be doing not only week 3, right? We're starting the 17th. We're open 7 days a week. All right? It's a coffee shop, right? We open 7 days a week. And we're going to be doing this for the next for week 2, week 3, week 4, and then we're also going to do the ending of the month. So in this case, make sure that you have this transaction because it's very, very useful that you could just copy and paste. So, all right. So now that I have this whole section here, what should I do next? General ledger. Okay. So this is why it's very important that you are going to do it in order, because if you go off one, you may forget one. So again, we're dealing with 7 accounts. All right. So let's go ahead and go through them. So what's the first account you're going to go to?
Checking.
Let's go to checking. So here, I'm going to go to here, and it is the 17. And here, I'm going to just quote that this was an in-store sale, okay? That way, it makes it easier for you to recognize that these are cash that you've deposited for the in-store sales, okay? General journal number 6. And for what amount did I debit my account for? 745.94. Okay, so what is my now account balance?
Is it 675?
Yep. Yeah, 675.86.
Did it go down? Did it pull through? Or maybe, okay, let me see if I,
That's because it's colored. We colored the font, yeah.
Okay, usually it doesn't copy the cell above it, but, oh, there you go. 675.86 is correct. Now, here, in this case, right, if we make this deposit in the bank today, right, and because we wrote that check out, okay, what's the one key thing? If we wrote that check out on that day, what's the assumption here?
It's probably deposited before the check got cashed.
It's probably deposited before the check got cashed. What? Elaborate.
No, same day, right? We wrote out a check on the 17th, and then we made that deposit from all the sales on the 17th.
Correct. Now.
So our account probably never even went negative. So there wouldn't be any fees or anything.
There wouldn't be any fees because technically we just sent the check out. The other side hasn't received it yet. They wouldn't receive it the same day, especially if you mail it out. So in this case, you won't get fined because here you do have a positive account balance if you deposit that cash from the bank that same day. But if you choose not to, then yes, you would definitely get fined. Okay? So again, every single day, at the end of the day, I'm going to require you guys to make your deposits of all cash sales. You definitely don't want to have $1,000 or $700 laying in your cash register because anybody can go into your store and rob you at any given point. So in this case, it's best to keep your cash safeguard by placing it into the bank. All right? But let's go ahead and continue on with our ledger, and then we'll go on forth. So now that we've finished the checking account, what is next? Sales discount. So we are finally diving right into our revenues account. So sales discount should be fairly close to the bottom. Okay, so here it is, sales discounts 3 below the bottom, and I'm going to go ahead and write the date. Here, I'm going to say it's because I had a grand opening, which is why I had a 20% discount. All right, important that you write that in there because what if it's Memorial Day, right? It's May, and I had a sale. I could have easily said, okay, for Memorial Day sales, all coffee is 25% discount. Or maybe all items in the store are 25% discount. All right, so definitely be specific on what the discount is and how much it is. All right, so in this case, right here, I have a grand opening for 20% discount. Post reference, once again, general journal number 6. And for how much was my discount for?
$172.27.
$172.27. And again, it's a contra account to your sales, right? Because if you didn't have this discount, that means you are subject to be having the full sales of the $861. But in this case, I had a discount, so therefore I'm only receiving $745. So once again, that discount is off the selling price, not the actual cost of the coffee itself. Okay, you're not taking a discount off what you purchased it for. You're taking a discount off of the selling price that you set the price for. Okay. All right. So this is my beginning balance. It should reflect the same on the debit side because it is a contra account. Okay. There you go. All right. So then, what is next?
Sales for medium regular coffee.
Sales for medium regular coffee. So here we are. We have sales regular coffee. We have sales supreme coffee. And then we have sales ceramic coffee mugs. So all of those are going to be for your wholesales. All right. Well, the ceramic coffee mugs is both universal between the in-store customer and your wholesale. So right below that is where I can go ahead and start entering in my sales because they're specific now. These are my in-store sales. So here I'm specifying that on the 17th, for my medium regular coffee, how many cups did I sell?
79.
We sold 79 cups, okay? So 79 cups. Now, this is going to be very important that you keep track of as well because we bought business supplies, right? Later on, we'll understand that instead of expensing it as just a total amount, we're actually going to break it down to seeing how much actual cups we actually sold. And we're going to use cost of material to expense it. So again, that's not going to happen till the very end of the period, or the end of the month in this case. So here, it is important I keep track of how many medium cups I used and how many large cups I used. So here, I sold a total of 79 cups for the medium coffee, right? Post reference, once again, General Journal number 6. Okay, and it's on a credit side, so what was my total amount for the coffee, for the medium regular coffee?
157.21.
157.21. That makes my credit balance 157.21. All right, I'm going to keep it like this because I'll enter the formula in once I do my second section of the sales. Okay. All right, what about my large regular coffee? How many cups did I sell?
70.
You sold 70 cups. Okay. Invoice General Journal number 6 for how much?
930.
$209.30. Okay, and that's going to be again a credit for $209.30. Right. I'm going to format all of these once again to decimal. Okay. What about my medium supreme coffee? How many cups did I sell?
81.
You sold 81 cups. Okay. General Journal number 6 for how much?
201.69.
201.69. Right? 201.69. Okay. And then what about my large supreme coffee? You sold 84 cups. invoice, post reference general journal number 6 for how much?
293.16.
$293.16. Okay. And that's going to be its credit balance. Okay. Last but not least, we have a sales tax payable, which is under your liabilities. Okay. So I'm going to scroll all the way down. Okay. Okay, here we go. Sales tax payable. Alright, so the 17. It's going to be obvious that you charge sales tax because you have in-store sales. Again, the other sales that are wholesales will not be subject to sales tax. So in this case, I am going to leave my information here blank. If you would like, if you want to put in that this was an in-store sale, you may do so. I choose not to because it's pretty straightforward. You only charge sales tax if it's an in-store sale. Okay. Post reference, general journal number 6. All right. And how much was my tax?
$56.85.
$56.85, and that's going to be my credit balance. Okay. So I went through my whole entire journal and I went through my whole entire ledger. Okay. What is next? Any guesses?
Deposit.
I'm sorry?
We have to do deposits.
Yes, we have to do the deposit. So, are we done with this transaction? We don't need to deal with our subsidiary ledger?
No.
Why no? We dealt with customers, right?
Yes.
So why do we not need to use a subsidiary ledger?
We have no customer here. I mean, it's customers, but not concretely.
Right.
And not a specific customer, it's
We-
just the general public.
Exactly. We don't even know who these people are, right? They're just strangers that come and walk in and say, "Hi, I just want a coffee." Okay, cool. We'll get you one. Just wait 5 minutes, right? We don't know who they are. We have no information. We don't even the one also thing that we do too as well here is we never gave them an account number. So for in this kind of case, right, we are not going to allow our general public customers an account number because, in this kind of sense, I don't need to keep track of every single person, okay? This person could be a one-time person that just decides to walk down the street and say, "Hey, look, it's a new coffee shop. Oh, look, they have a nice discount. Let's check it out." They could be a one-time kind of customer, right? Or they could be a lifetime customer, right? Someone that frequently comes in and says, "Wow, this coffee's so great. I'm going to come in every day. It's right next to my work." So all of these things, right? Again, we don't know who they are. It's a general public, and we're not going to use them because we don't care for specifics, right? We don't have the specific information. So in this case, we do not need to use a subsidiary ledger. And yes, you are correct. The next thing that we got to do is we got to go ahead and deposit our money. Okay, so how much cash am I supposed to be receiving? Or how many cash did I actually receive?
$745.94.
745.94. So that's correct. Now in this case, because we have 794 dollars, right? We have it in cash. We can go ahead and deposit it immediately. Now, obviously when we do cash sales, right, if this is the extra money that we receive, we're gonna obviously going to make sure that our cash register is fully stocked, and then we're gonna take the all the big bills, right, and dump it into the bank. All right, so that's the deal here, right? And since I need the money now, because if I don't, I'm going to overdraft my bank account, then I'm going to go ahead and deposit it the same day. So in this case, I'm depositing it as of the 17th of June. So therefore, my bank should now be deposited with the $745.94. Okay, which we've already updated our checking account, so it pulled us up back to the positives, right? So there we kind of had a little scare right there. All right, so good. Anything else now that I made my deposits?
No, that's all for this one.
Okay, good. Thank you. Okay, so that is all for this, right? We recorded our sales in our journals, right? We recorded it into the ledger. We don't need to do the subsidiary ledger, and we recorded the money and deposited it. Okay? So now we dealt with inventory, right? What kind of inventory was my coffee and my was the regular coffee and Supreme coffee? What tracking method did I use for this kind of coffee?
Moving average.
We did moving average, okay, so that's the costing method, but what tracking method did I use?
Perpetual.
Perpetual. So here you go. I have perpetual inventory, and now because I have perpetual inventory, my obligation is I need to update my inventory. So let's look at this first. From just using those coffee to make the coffee, right? I took the coffee grinds by the pound, and I end up making all those coffees, and it took me a grand total of 12 and a half pounds of the regular coffee and 14 pounds of the Supreme coffee. Okay? Now, if this is going to be how I update my inventory, right? I'm updating it based on the pounds that I used, right? How do I journalize this? Okay, if you need a hint, go check out chapter 7. Okay. If I'm updating my inventory right now, right? Okay. Are we gonna debit inventory or are we gonna credit inventory?
Debit inventory.
Why would you debit? Am I
No, it should
increasing?
be credit to inventory since we're taking it out of inventory.
Correct. We're taking it out of inventory. All right. Okay. Now let's take a look at our chart of accounts one more time. Okay. All right. I'll give you a hint. It's considered an expense, but what is directly correlated with selling or inventory in general?
cost of goods sold?
Yes, cost of goods sold. Now let's break it down. Is it specified on each particular coffee?
Yes.
Yes. So we have a cost of goods sold for the regular coffee, and we have the cost of goods sold for the Supreme coffee. So here we need to record that we sold this coffee, right? We got rid of it, right? It's the cost of doing business, right? So in this case, we're expensing it, right? We're getting rid of it and taking it directly out of my inventory. So let's go ahead and do my foundation first so we can kind of understand the flow of what we need to do. Okay? So first things first is general journal, right? We have a cost of goods sold, right? It's an expense account. So we're going to debit it for the regular coffee. Okay? And what account number was that?
550.
550. And then we also had a cost of goods sold for the Supreme coffee. Oh, excuse me. Cost of goods sold, Supreme coffee. All right, and that account number should have been 50.
501.
5100. Good. Okay, and because we're taking it directly out of my inventory, what are my 2 inventory items that I have?
Regular and Supreme coffee.
Absolutely correct. So regular coffee, right? If we're going to cost out our regular coffee, we're going to have to take it directly out of our regular coffee, right? In this case, I'm just combining my information together because I can, because this is one transaction. I don't need to separate it. You can if you want. It's not wrong. But in this case, I want to save some journal space, and I also want to save some time. So instead of going back and forth about 4 or 5 times, I'm only doing it once. I'm creating a cost of goods sold for my regular coffee, and I'm doing at the same time the cost of goods sold for my Supreme coffee. All right, just like my sales, instead of recording each sale individually, I'm just combining them all together. So here I'm going to take out from my regular coffee. At the same time, I'm also going to take out from my Supreme coffee. Okay. All right, what are my account numbers for that? 12020 and 12040. Good. All right. Now I have to now calculate how much the cost of goods sold to sell 12.5 pounds. So this is now where I can go to my inventory worksheet to solve for my cost of goods sold. So again, inventory worksheet, right? We're going to go straight to my regular coffee, all right? And notice this, I need to make sure that when I calculate and do my inventory, I need to make sure that I know exactly what costing method I'm using. So in this case, I'm using moving average. Good thing I have here is I'm only dealing with one batch. So in this case, I am going to type in right here under the cost of goods sold, how many pounds of the regular coffee did I use?
1250.
12.5 pounds, so 12.50, right? 12.5, right? Now in this case, my moving average, right, is an even number. So I don't need to do an equal round just yet. I can just simply apply my cost, which is $1.60, right? Because I'm not looking at what I purchased it for. I'm looking at the total cost, including the freight. So in this case, it's $1.60, and I'm going to cell reference this. Okay, so I can make everything a little more easier instead of typing everything in, because you can get rounded numbers if you type everything in. So in this case, I'm going to figure out how much my total cost of the cost of goods sold was. So what was this amount here? $20 even. All right. Now again, I'm using moving average. I taught you a couple ways that you could do moving average. However, I'm going to do it this way just so then it keeps good track of how I do my inventory, but at the same time, I am also, cell referencing, so I can't just eliminate things out of my inventory worksheet right away. So in this case, I'm going to go ahead and do a simple formula here. If I started with 125 pounds, right, I'm going to subtract out the 12 and a half pounds. So therefore, I should get a total of 12 and a half pounds left, right, because I'm taking it away. Same thing with my total cost, right? I started with $200 and now I'm subtracting $20, okay? Leaving me $180 left. Because we're using moving average, right? Our key idea here is that we need to constantly keep recalculating our average cost per item. So remember, if you remember from when we set this up, the middle one will always have the formula to keep on calculating the average cost per item. So in this case, I'm going to drag my formula down and it still holds as $1.60. If you remember, the formula is I'm going to take the total cost and I'm going to divide it by my total quantity. So in this case, it's an even number. I didn't change anything. I didn't add anything. So it's still going to reflect as $1.60. Okay. And of course, because I'm using moving average, this is the one where I'm just going to have to blur out the information. Right? So I'm going to be moving the average along as well as eliminate or blur out every single box. And plus I cell referenced it. Okay? So in this case, if you ever were to look back at this, you're able to unveil it and see how much the inventory has changed your average cost. So now I should have a total of 112 and a half pounds costing me at $180. Okay, and this number is going to be very, very pertinent when we do our ledger. Okay, so that's how I'm going to do my inventory worksheet for the regular coffee. So let's go ahead and take a look at our Supreme Coffee. Supreme Coffee, what method are we using, or what costing method? We're using FIFO, okay? How many pounds of my coffee did I actually sell for the Supreme? Or used, I'm sorry.
14.
I used 14, okay? Same idea here is because if we take a look at our cost of the each pound, right? It's even at $1.80, so I don't need to do an equal round here either, right? I have an even amount of the cost per item. So again, how much okay. Whoa, I missed that so bad. So 612, and this one is 617. Oh, okay, everything is off, huh? Oh, no, just that one. All right, so I have 14 here, and I have the $1.80 here. So what is going to be my total here? What's my total amount of my cost of goods sold? 25.20. So I have to change this real quick to a number. Okay, and you said it was 25.20. Okay. So again, in this case, I'm dealing with FIFO. I only have one batch, and what you can do here is remember we entered the formula as in the cost area because we are going to be changing the quantity. So in this case, I'm going to go straight ahead and do 125, subtract this 14 pounds to leave me with a remainder of 111. and it's going to automatically calculate for me that I should have 199.80 cents in my inventory. Okay, so once again, that's how I'm going to be doing this particular inventory. I'm just going to go ahead and utilize the platform and keep it simple and sweet, and just enter in every single formula in the inventory on hand. I don't need to do my calculations in the middle. I don't need to transfer the information over. I'm just going to go straight ahead and edit the information right then and there. Okay? All right. So this number is important, the 199.80. Okay? Very important, because now let's go back to our journal, because now we have our numbers, right? We utilized $20 for the regular coffee, and we utilized $25.20 in our Supreme coffee. So let's go ahead and enter that in my journal. Okay, so I have a cost of goods sold, okay, for $20 and $25.20. Okay, all right. And then of course here I'm gonna make a note that this was because of the in-store use, right? I used the coffee. Okay, everyone good with me so far?
Yes.
Okay, 25.20. Okay, so now that we journalized it, what always comes after the journal?
Ledger.
The ledger. Very, very important. Okay, so here I'm going to go ahead and go straight to my cost of goods sold. So again, it is a separate item, or a separate tab, just because we have so many expenses, so I wanted to separate it to a cost of goods sold. So here we're at cost of goods sold. Right below it is cost of goods sold for regular coffee. So I'm going to go ahead and write the date. How much coffee did I use for the regular coffee?
12.5 pounds.
So here I'm going to note that I used 12.5 pounds, because when we sell our coffee by the pound, we're also going to put in that we sold it. Okay? So in this case, I used 12.5 pounds. And general journal number 6 for $20. Okay? Format this to coma style. Okay? And then now I'm going to go ahead and update my cost of goods sold for my Supreme coffee. Okay? How many pounds did I use?
14.
We used 14 pounds. LBS. Okay. General journal number 6 once again, and it's going to cost me $25.20. Okay. All right. All right. Last but not least, we have to go ahead and update our actual inventory. So let's go to our assets and locate our inventory. Okay. So scroll all the way down till you find your regular coffee. Here I am, regular coffee. So again, same thing here. I'm going to note that I used 12.5 pounds of the regular coffee. Okay, general journal 6 once again, and this time I'm going to credit my account by the 20. Now if you notice this, if you have your formula in here, where do you see this number? Where have you seen this 180 before? Okay, we see this in your inventory worksheet, right? We solved for the amount, and it says that for my regular coffee, I should end up with 180 left in cost. All right, so again, this is your guideline or checkpoint to ensure that you did the inventory correct, right? Making sure that if you got 180 here, then you should also get 180 in your general ledger. All right, so once again, this is your proof that you did your inventory correct. All right, so I'm going to update my Supreme Coffee real quick. So once again, General Journal 17, we used 14 pounds. General Journal number 6, and it was a credit for the $25.20. So therefore, your amount balance should be $199.80, which indeed it does match your inventory worksheet, right? We should have $199.80 left. Okay. All right, everyone good so far?
Yes.
Yep.
Okay. All right. Now, okay, we officially finished our inventory worksheet. We finished our updating our inventory, and we finished our ledger. Right? We journalized it, and we journalized it in the ledger. We don't need to update our subsidiary ledger because it's an internal transaction once again, right? We're not dealing with Atlas Coffee, right? All Atlas Coffee is good for is that we just purchased it from them, right? We don't care for them anymore because this product is ours. Okay? So with that being said, we can go ahead and continue on with the next segment, right? Any questions? Okay. Let's see if we're good on time. Okay, so now it is 11:30. So I'm going to go ahead and stop here. Tomorrow we'll pick up on the 18th of June. All right, so expect to see all these same exact transactions over and over again, because that's exactly what bookkeeping does. You're going to recognize the same transactions with a few variations, and etc., etc. So if you don't have any other extra questions, okay, we're going to wrap up today, and I'll see you guys tomorrow.